Peer-to-peer lending decoded. What is peer-to-peer lending? According to Forbes, peer-to-peer lending is a new method of debt financing that allows people to borrow and lend money without a financial institution. Harnessing technology and big data, peer-to-peer platforms connect borrowers to investors faster and cheaper than any bank. See www.forbes.com. Who are the bigger players in the peer-to-peer lending space? According to Forbes, the best-known peer-to-peer lenders are Prosper, Lending Club, Upstart, and Funding Circle. NerdWallet adds this additional peer-to-peer lender, StreetShares. See nerdwallet.com/blog/small-business/small-business-loans-peer-to-peer-lending. Let's turn to Funding Circle. Funding Circle only makes business loans. The company operates in the U.S., the U.K., Germany, and the Netherlands. They have loaned over $3 billion. Funding Circle has a business borrower's bill of rights. See www.fundingcircle.com/us/business-borrower-bill-of-rights. They have loans from $25,000 to $500,000 in the United States. Rates run from 5.5% to 27.8% depending on grade. Investors are charged a 1% monthly service fee on all payments received within the month. Minimum investment is $50,000. What about Upstart? They have made over $300 million in loans. Upstart uses their own unique grading criteria. Their target niche is young professionals, and more than 90% of their borrowers are college graduates. When deciding whether to loan, they look at FICO scores. Upstart also considers educational background. They are also targeting small business startups. Upstart has the lowest default rates across the industry thus far. Over 94% of their loans are on track to be repaid in full. Upstart offers loans from $3,000 to $35,000. Loans are for fixed periods of 3 to 5 years. Interest rates run from 4% to 26%. Interest rates depend on grade. Upstart's modeling system has so far been extremely accurate when it comes to predicting defaults and future returns. Minimum investment is $100. Investors pay no fees. Upstart makes its money just from borrower origination fees. If a loan defaults, Upstart refunds the investors by using the origination fee. Therefore, if loans go bad, Upstart loses money. Investors cannot cherry-pick individual loans. Instead, they can opt to invest in a specific grade or loans with set criteria. And how about StreetShares? Founded by veterans, StreetShares gives veterans special treatment. This includes an investment called Veteran Business Bonds. Minimum investment is $25. Return is 5% fixed. StreetShares invests in their own products. Basic qualifications are that you must be a U.S. citizen and be in business for at least 1 year, sometimes 6 months. You need to earn a minimum amount of revenue. The borrower must have a business guarantor with reasonable credit. Borrowers must provide the business owner's Social Security number, the company EIN, the amount of total outstanding business debts, the 6 most recent business bank statements, and the most recent personal and business federal tax returns. At times, StreetShares will also ask for financials, like a P&L and balance sheet. They perform a soft credit check only and offer 3 to 36-month term loans. StreetShare offers lines of credit from $2,000 to $100,000. Maximum loan amount is $100,000. There is no application fee. Let's recap. Peer-to-peer lending allows investors to lend out money. Lending platforms act as go-betweens. These platforms often grade borrowers to assess risk. They are responsible for collecting from borrowers. Sometimes they will pass the fallout from defaulted loans onto investors. The biggest and best-known players in this space are Prosper, Lending Club, Upstart, and StreetShares. Contact us today to learn more about peer-to-peer lending decoded.